Hello, you guys. Hello, hello, hello. Thank you guys so much for tuning in. Thank you guys so much for tuning in on today. And so a lot of individuals, they have questions regarding a brand new tax credit that is being released for the upcoming tax season. And so I want to take the time to make sure that I explain. I want to provide some teaching to individuals who may have questions about this. So thank you guys so much for tuning in. Hello, 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 everyone. Hey, Miss Wanda. Thank you guys so much for tuning in. Hello. Hey, Joy. God bless you. Thank you guys so much for tuning in on today. Hello. Hey, Kay. Thank you guys so much for tuning in. So listen, I am broadcasting this on Facebook, Periscope, YouTube. I am even putting it on my ministry page because I think it's very important for individuals to understand a lot about this upcoming tax credit that is $15,110. And so I want to just do a little bit more teaching and to make sure that you guys are fully educated and also to educate my fellow taxpreneurs on this particular credit as well. So thank you guys so much for tuning in. Now you guys can go ahead and share out the broadcast because this would be extensive training. Some of you guys who have been rocking with me in ministry, you may not know this side of me as far as my occupation is concerned. So you guys will learn a little bit more about me and my role in the tax industry. Hey, Erica. Hey, Tammy. Hey, Wilhelmina. Hello, Miss Annette. God bless you. Thank you guys so much for tuning in. And thank you guys so much for sharing out this broadcast. So I don't want to be before you long. And so I really want to go ahead and get right to it. So I'm going to go ahead and pull up my screen so that we can get started talking about this particular credit on today. All right. So I just want to check and make sure that you can see me. Let me know you can see me and see the screen. All right. All right. So we're going to go ahead and get started. So there's a brand new credit that is out and available to small business owners. And so you may want to know who qualifies for up to the credit of $15,110. Now, before I get into the teaching on this, some of you guys may have questions as to what we're going to discuss. So my objective today is to discuss with you what Form 7202 is, how to qualify for the credit. Is it beneficial for clients, what you should know, and how to calculate the credits. Now, many of you guys may be asking yourself, why should you listen to me? First of all, you should listen to me because I have over 20 years in the tax industry experience. I'm a tax educator with the IRS Tax Academy. I am the founder of the IRS Tax Academy, which provides continuous education credits on the behalf of the IRS. I am the author of the IRS Tax Training Manual. I partner with hundreds of taxpreneurs all over the world. I help taxpreneurs build six-figure tax firms. I enjoy helping taxpayers receive max refunds the legal way. I also provide software, resources, and coaching to tax professionals. I'm the co-owner of Accurate Tax Services and also the managing partner of Tax Genie Tax Services. So this is all of the reasons why you should listen to me and to know that I am going to provide you all with accurate information. And that's one of the things that people really trust about my page and trust about my expertise is that I am going to provide accurate information. And so you can take this information that I'm going to provide to you guys to the bank and you can absolutely cash it. All right. So we're going to go ahead and let's get started. All right. So what is Form 7207? The name of the form is Credit for Sick Leave and Family Leave for Certain Self-Employed Individuals. Form 7202 is used to figure the amount of the credit an individual is able to qualify for qualified sick and family leave due to coronavirus on the 2020 tax return. So this is a brand new credit that the IRS has released to self-employed individuals when they file their taxes, okay? And it is used to claim a refundable tax credit for sick leave and family leave for certain self-employed individuals. Okay. All right. So if you guys have any questions, you can put them in the comment field, and I'm going to try my best to answer your questions. You may want to hold your questions until the end because I'm going to cover just about everything concerning this credit. All right. All right. So let's make sure that you understand that this credit has been released due to the coronavirus and the pandemic and how it has affected self-employed individuals. Now, what many of you all may not realize is that if you are working for an employer and you are receiving a W-2, you probably have already received some type of benefits from your job. Well, self-employed individuals like myself, we don't receive any type of benefits from a job. Therefore, the IRS created this credit so that we could also receive some type of help in our business. Okay, so the only day that may be taken into account in determining the qualified sick leave equivalent amounts are days occurring during the periods beginning on April 1st, 2020 and ending on December 31st, 2020. So you need to know that if you were affected between April 1st, 2020 and ending on affected April 1st, 2020 and throughout the year up into December 31st, 2020, you need to continue to listen. The refundable credit is available to self-employed individuals if they were unable to work or had to care for family members due to coronavirus. And I would say just about every small business owner and entrepreneur, you probably have been affected one way or another. So that means that you would qualify for this credit. All of us in one way or another have been affected in our business, or we have not been able to work due to our kids or even due to other family members being exposed to the coronavirus. Okay, so the 7202 form is broken down into two portions. There's a qualified sick leave with qualifying amount up to $5,110. And then there's the qualified family leave with qualifying amounts up to $10,000. And so the total amount for this credit is $15,110. Okay, so this is a refundable credit, and so this means that this can increase the amount of your refund, or it can reduce your tax liability. And if you are due a refund after claiming this credit, you'll get that in a form of a refund check, right? All right, so let's continue to go on. So who is an eligible self-employed individuals for purposes of this credit? So you may be asking, well, do I qualify for this credit? This is what you should know. An eligible self-employed individual is defined as an individual who regularly carries on any trade or business with according to the IRS, and would be entitled to receive qualified sick leave wages or qualified family leave wages if the individual was an employee. So in other words, as long as you are working your business with an intent, or you're working an activity with an intent to generate profit, then you will qualify for this credit. And it's saying that it said that they know that you're self-employed, but if you so happen to have been working for a company instead of being self-employed, if you would have qualified for the credit if you work for a company, then this means that you qualify for the credit if you work for yourself. So you can have a lawn care service, you can be a speaker, you could be a coach, you could be a stylist, you can be a tax preparer, you can be in the financial industry, you can be in the janitorial business. It does not matter what type of business. You can be an Uber driver, you can be in network marketing. It doesn't matter what type of business that you're in. As long as you have an intent to generate profit, then this credit you would qualify for. Okay, if an individual is an independent contractor who generally performs services for multiple clients as a non-employee, he or she is self-employed and is eligible for the tax credit for days he or she is not able to work or telework for reasons related to COVID-19. So some of you guys who are watching today, you may not feel that you qualify for this particular credit. Maybe you don't have an EIN number, or maybe you feel that you don't consider yourself a small business owner. Well, if you work for anybody and you receive a form called 1099 NEC, it used to be called a 1099 miscellaneous, then you would qualify for this credit. Okay, as long as somebody else pay you for the work that you do, then you will qualify for this credit as long as it's not a job. Okay. All right. Eligible self-employed individuals are allowed an income tax credit to offset their federal self-employment tax for any taxable year equal to their qualified sick leave equivalent amount or qualified family leave equivalent amount. Listen, you guys, it is important for you guys to understand, as I have explained before, that this form is broken down into two portions. So there are two credits that is compiled on one form, and this form is 7202. So you'll have a portion that is for sick leave, and then you'll have a portion that is for family leave. Okay, so the sick leave that is related only to you is $5,110. The family leave that is related to people that you take care of due to the coronavirus, that qualifying amount is up to $10,000. Okay. All right. So how is the qualified sick leave equivalent amount for an eligible self-employed individual calculated? This part is very important for you guys to understand. An eligible self-employed individual who is unable to work or telework. So telework means that you working from your home or working from a computer like I'm doing right now. Okay. So if you weren't able to travel to your work, or if you were not able to telework because the individual is subject to federal, state, or local quarantine or isolation order related to COVID-19. So I live in the state of Alabama, and Governor Kay, she have had several state orders for quarantine due to COVID-19. So that means that if you live in the state of Alabama, you would qualify. So many states have had some type of order. Okay. Have been advised by a healthcare provider to self-quarantine due to concerns related to COVID-19. So let's say if your state have not put a quarantine order in place, but let's say that you have been advised by a healthcare provider to do self-quarantine, okay? Then this credit would apply to you. Or is experiencing symptoms of COVID-19 and seeking a medical diagnosis. Let's say that you went to a party, right? And then everybody at the party, they got COVID-19. Your results may have come back negative, but the doctor may still say, hey, you need to self-quarantine for 10 to 14 days. Then you will qualify for this particular credit. Okay. So how much will you receive for the qualified sick leave portion of the credit that is available? Okay. The qualified sick leave equivalent amount is equal to the number of days during the taxable year that the individual cannot perform services in your trade or business for one of the three reasons that I previously discussed. So all three of the reasons does not have to be connected to you. As long as you qualify for one of the reasons, then you can receive qualified sick leave credit. Okay. So the 7202 form is broken down into two portions. All right. So for the qualified sick leave, it's the equivalent amount is the lesser of the following. Okay. So 100% of your average daily self-employment income, $511. Taxpayers can elect to use 2019 self-employment income to calculate average daily self-employment income. right? So let me break this down. This is why it's very important, especially for this upcoming tax season. I know that many of you all are used to filing your taxes, yourself. But if you're a self-employed, you need to go to a tax professional so that they can make sure that you are qualifying for the max amount that you are allowed. So I want to break this down. So the IRS is saying that the lesser of the two, 100% of your average daily self-employment income. And I'm going to show you guys how to come up with that amount, or $511. So if your daily self-employment income is $600, then you could only use the amount of $511. Okay? If your daily self-employed income amount is, let's say, if it is $450, well, you can't use $511. You can only use the $450. So 100% of your daily self-employment income. So in other words, this means that nobody would basically qualify for the same amount, because it is based upon your daily self-employment income. Okay, so the max number of days related to the qualified sick leave portion for this credit can be taken is only 10. So let's say, for example, that you qualified to use the $511. Okay, so if you were to multiply $511 times 10, that's going to give you $5,110. So you would qualify for the max. If your average daily self-employment income is $400, then you will take $400 and you will multiply it by 10. Now listen, you guys, this is important for you guys to understand. Let's say that you were out of work for 14 days, but you can only get credit for 10 days out of the 14 days. If you were out for 5 days, then you wouldn't qualify to use 5 days. You wouldn't qualify to use 10 days. You would only qualify to use the 5 days that you were out. Okay, so I hope that makes sense. So you would take your 5 days and you will multiply it by $511, or you will multiply it by your average daily self-employment income to give you the calculation of what you would qualify for the qualified sick leave. Okay, so in Alabama, most people have had to quarantine for at least 14 days. So majority of individuals would qualify to take the full 10 days. Right? So I hope this makes sense. Okay. Now, how much will you receive for the qualified family leave? Now, keep in mind, this is the $10,000 amount. And yes, you can qualify for the qualified sick leave, and you can qualify for the qualified family leave as well. For an eligible self-employed individual who is unable to work or telework because the individual, listen to this, is caring for an individual who is subject to federal, state, or local quarantine or isolation order related to COVID-19, or has been advised by a healthcare provider to self-quarantine due to concerns related to COVID-19. Okay, so as long as you're caring for, as long as you're taking care of someone who may have been exposed to COVID. So for instance, let's say that you sent your baby to school. The entire class or a classmate broke out with had coronavirus. So now your baby have to stay out of school for 14 days due to the self-quarantine. Then you would, and you got to take care of your baby, then guess what? You would qualify for the qualified family leave. Okay. Or you are caring for a child. Listen to this. You are caring for a child if the child's school or place of care has been closed, or a child care provider is unable due to COVID-19 precautions. So there are a lot of daycares that are closed. There are a lot of after school programs that are closed. There have been several schools that are closed. So remember, when the quarantine first broke out, remember, you can only look at the days after April 1st. Okay. So depending on where you live, your baby could have still been going to school. Then guess what? You will qualify for the qualified family leave. Okay. So as long as you're caring for a child. So for instance, my daughter, she could no longer go to after school care. And so we had to cut our hours that we were working for ourselves to take care of her due to COVID-19. Then there were times where the after school care program was no longer open due to COVID-19. So we will qualify. And guess what, you guys? We will qualify for the entire time that is allotted for this qualified family leave, because our entire schedule from April 1st to December 31st was affected due to COVID-19. Okay. Or is experiencing any other substantially similar condition specified by the Secretary of Health and Human Services in consultation with the Secretary of the Treasury and the Secretary of Labor. Listen, if you don't understand what that part means, most people would fall into the first two categories anyway. All right. So the qualified family leave, it is important for you to understand. You will qualify for the amount that is lesser of the following. So remember, for the qualified sick leave, there is 100% of the average daily self-employed income. Well, for the qualified family leave, you would only qualify for 67% of the average daily self-employed income, okay? Or $200, whichever one is the lesser, okay? So if 67% of my daily average income was $500, and then there is $500. Well, I can't claim the $500. I could only use the $200, because $200 is the lesser of my 67% of the average daily self-employment income. Okay. Now, the max number of days for this credit is 50 days. So let's say if you qualify for the $200 and you qualify for the entire 50 days like we would, then we qualify for $10,000 of this particular credit. Okay. So if your daily average is your 67%, let's say it's only $100. Well, you would $100 times 50 days, that would equal what? $5,000. So you would only qualify for $5,000 of this particular credit. All right. So somebody may be asking, how is the average daily self-employment income for an ineligible self-employed individual calculated? So an average daily self-employed income is an amount that is equal to the net earnings from self-employment for the taxable year divided by 260 days. A taxpayer net earning from self-employment are based on the gross income that he or she derives from the taxpayer trade or business minus ordinary and necessary trade or business expenses. So let's say that you generated $10,000 in your business. Then your expenses is $5,000. Well, you have to subtract $10,000 from $5,000 in order to get your gross income, which is $5,000. So your gross income is not the revenue that you generated, which was $10,000. You have to subtract your expenses from that $10,000 to give you your gross income. So let's take a look at what that would look like. Okay. So let's say that my net earnings is $30,000. Okay. So $30,000, I would take $30,000 and I would divide that by 260 days. Okay. And so my average daily self-employment based upon a $30,000 net earnings is only $115.38. So for the qualified sick leave, then I can use the entire $115.38. I can use that entire amount. Why? Because for the qualified sick leave, remember the max amount was $511. Okay. So based upon my net earnings, then I'm only qualified to use to claim $115.38. Okay. So for the qualified family leave, remember it is 67% of your qualified family leave. It's only 67% of your next earning. So what you'll do is you'll divide $30,000 or whatever your net earning is, divide that by $260, and that amount, you got to take that amount and you still have to get you have to multiply 67% in order to get the amount that you would qualify for the qualified family leave. And so in this scenario, the 67% is $77.30. But keep in mind, the most was $200. So I wouldn't qualify for the entire $10,000. I would only qualify for $77.30 times 50. And that would give me the amount that I will qualify for the qualified family leave. Okay. So if I was to take the $115.38 and I have to multiply that by 10, because remember that the max amount of days is 10, that would give me the amount that I will qualify for the qualified sick leave. Woo! So I know that this seems like a lot, but that's why tax professionals are very important and very instrumental. And you have to choose a tax team that is very knowledgeable of the type of credit that you will qualify for. And also for tax professionals, it is very important that we are knowledgeable in order to make sure that we are helping our clients to get what they will qualify for. Okay. So I've already done that with you guys. Okay. All right. All right. Can a self-employed individual receive both qualified sick or family leave wages and qualified sick or family leave equivalent amounts? So this is important for you guys to understand, especially if you have self-employed income and you're also a W-2 wage earner. Yes, if the individual is only self-employed, yes, they can qualify for both of the credits. Yes, they can qualify if they're self-employed and a W-2 wage earner, but the qualified sick or family leave equivalent amounts are offset by the qualified sick or family leave wages if the individual is self-employed and has W-2 earnings. So there is an offset if you have a W-2 to attach to your return. Okay, so I will explain that. If a self-employed individual is entitled to a refundable credit for the qualified sick leave equivalent amount and also receives qualified sick leave wages as an employee, now not as a self-employed individual, now we're talking about your W-2 wages. So as an employee, reduces the qualified sick leave equivalent amount for which the self-employed individual may claim a tax credit to the extent that the sum of the qualified sick leave equivalent amount described and any qualified sick leave wages exceeds $2,000 or $5,110 in the case of any day, any portion of which is paid sick time. Now, I know all of that may sound like jargon, so I'm going to give you guys an example of this to help it make more sense to you. Let me just go over this portion before I give you an example. If a self-employed individual is entitled to a refundable credit for a qualified family leave equivalent amount and also receives the qualified family leave wages as an employee under the Emergency Family and Medical Leave Expansion Act, which was implemented earlier in the year due to coronavirus, well, you're going to receive a reduced amount. In other words, you're going to receive a reduced amount. So let me give you guys a prime example. In his capacity as an employee, taxpayer B receives $6,000 in qualified family leave wages. In addition, in his capacity as a self-employed individual, taxpayer B is eligible for $4,500 in qualified family leave equivalent credits. Taxpayer B may claim a qualified family leave equivalent credit of $4,000. Why? Because he must offset the total qualified family leave wages and qualified family leave equivalent credits to which he is entitled under the EFMLEA. That is, so when you add $6,000 that he qualified for, plus the $6,000 that he qualified for with his job, plus the $4,500 that he qualified for a self-employed individual. If you add both of them up, the amount together equals what? $10,500. So remember, for this portion of the credit, you can only get how much? $10,000. So the taxpayer would lose $500 because it cannot exceed what? $10,000. Okay. So if he received a certain amount from his job and he qualified for a certain amount under self-employed, add those two together, it'll give you $10,500 in this example. Well, the taxpayer would lose $500. Why? Because it's over the allotted credit amount. Woo, breathe. Okay, so here are a few things that you should know. If the taxpayer is self-employed and a W-2 employee, to complete the form 7202, the self-employed individual who are also employees will need any amount of qualified sick and family leave wages that their employer reported on the form W-2. So as a tax professional, we have to look at the W-2, and it's usually in this, according to the IRS, that the employer should have put it in box number 14 on the W-2. So you need to look at box number 14 in the W-2 to see if the taxpayer received any amount from their employer. Everybody may not have received something from their employer. You would know based upon the W-2, look in box number 14. Okay. So in order for you to be able to complete form 7202, you have to have the W-2 in order to look in that box, because you will have to put the amount that's in that box on box number 14. You will have to put it on form 7202. Okay. Now listen, this is important. Now, although this is a refundable credit, this credit is not meant to give the taxpayer a refund up to $15,000. Okay, or $15,110. Okay, so I need to be absolutely clear on this. Okay, because a lot of tax professionals have their clients thinking that they're about to receive an additional $15,110 in refund. That is not true, even though this is a refundable credit. This credit is intended to reduce the amount of self-employed tax that they would have owed. This means that a self-employed individual can effectively reduce payments of estimate income taxes that the individual would otherwise be required to make if the individual was not entitled to the credit on the 1040 tax return. Okay. So in other words, you have to realize that, first of all, in order to qualify for this credit, then the taxpayer have to have a positive on their Schedule C. They cannot show a negative. Now, this is what you all need to really understand, that there are going to be times where a tax client may say that they're positive in order to qualify for this credit. So we all know that if you are positive on your Schedule C, you should know as a tax professional, what does that mean for the taxpayer? That means that the taxpayer usually will owe the self-employed tax, right? So if I was to claim $30,000 on my tax return right now, okay? If I was to claim $30,000 of in net profit on my tax return right now, okay, then that would show that there is a certain self-employed tax payment that I would have to pay the IRS, or it will reduce the amount of my refund, right? So let's say that I was going to get a refund of $3,000. And now that I have this business that I need to add, and now that I have a positive on my Schedule C, I owe, let's say, $2,000 in self-employed tax. Well, $3,000 minus $2,000, that equals what? That only leaves me with a $1,000 refund. Okay. Now, this is where the credit comes in for this. And that's why it's very important for you guys to understand is that there's no way for you to help a client to understand how much they will qualify for over the phone without having all of their documents, because it may not necessarily be beneficial for your client. So individuals who are high income tax earners as self-employed, this credit is very beneficial for them, because individuals like me, we normally, my husband and I, we pay the IRS. So if we qualify for the entire $15,110, oh my God, that means that we're not going to be, we actually are saving money, because we don't have to pay the IRS $15,110. Why? Because we got it in a credit. Now, there are going to be individuals that will see a difference in their refund, but most individuals, possibly, I would say possibly, because most individuals will not, low income wage earners, tax business owners that are in the negative, watch this. Due to the coronavirus, a lot of self-employed individuals, their income has been impacted anyway. So they really wouldn't see a benefit like they think they would concerning this credit, although it helps. Okay. The business, again, have to have a net profit in order to qualify. This credit is beneficial for individuals who are high earners and usually owe the IRS. Okay. When filing this credit, I would advise tax offices to have a due diligence form for the taxpayer to complete. No information is required from your client to bring to the office besides the number of days that they were affected. And if you pull out a calendar, then you guys can come up with those days together. Looking at the calendar, they may have something from their medical professional, but they don't have to bring that in. You can just ask questions to help calculate the number of days that they will qualify for both of these credits. And remember, part of due diligence is asking questions and also documenting the answers. Self-employed should maintain documentation establishing their eligibility for the credits as a self-employed individual in case of an audit. So we'll tell our clients that they need to keep whatever documents, and those documents may come from the closing of a school. The documents may come from their employers. The documents may come from just from their records. It may come from a healthcare professional. Okay. All right. So my name is Dee Edwards. I hope that the information that I provided to you guys have been beneficial to you guys. If you have questions, you can type your questions and I'll try to go back and answer your questions right now. I would love to work with individuals who are self-employed and who feel they may qualify for this credit, who have additional questions. I would like to be your tax preparer. My team and I would definitely love to work with you guys. Okay. All right. And so for all of my fellow tax professionals, if you have questions, be sure to document them. All right. Woo. All right. Let's see if you guys have any questions. Danita said, this is why you need a tax professional, because it's a lot. It definitely is a lot. Yep. Just to be sure, does that include middle and high school that close and children are virtual? Yes. So as long as the parent is self-employed and they have had to make a rearrangement in their schedule, then yes. Like I said, most individuals will qualify. Self-employed individuals, you know, we're affected in some kind of way. So we would usually, let me just talk about myself. Okay. So I'll just talk about myself. I qualify, my husband and I, we qualify for the whole 50 days and we qualify for the 10 days. We do. Okay. You can take the max days if needed. Yes, you can take the max days if needed. The max days is 10 for one credit and 50 days for the next. Somebody say, is this for a rolling 12 months? No, this credit is only applicable April 1st, 2020 to December 31st, 2020. This is not for the entire year. So somebody put as a comment, and I can't see who it is. I can't, they put as a comment that is for the entire year. No, it is not. Okay. I'm an educator for the IRS. And so I provide continuing education credits. So what I say, you can take it to the bank. This is not for the entire year. It is for starting April 1st, 2020 to December 31st, 2020. Okay. Okay. Kay asks, does this mean caring for a person who have had COVID-19 qualify for the family credit? Yes. As long as you were taking care of somebody, you could have gone to their house and take care of them. Okay, you can sit out. You can sit outside in the car, and if they call you and they need something, you just slid it, you know, under the door or whatever. That is considered taking care of somebody who had coronavirus. Okay, let's see. Okay, all right. Let's see. Okay, I wanted to make sure. Let's see. Should you file jointly married if only one person was self-employed? That is a tough question to decide. So you cannot decide to file married, filing jointly if only one person is self-employed. You have, if you are married, there are only two options. Let me tell you, if you're married, there are actually three options that's available for you. The first two that are common is married filing jointly. As long as you and your spouse lived in the same household, the last 6 months of the year, then you can file married filing jointly. As long as you're married, you can file married file jointly. You have options to file separately. I advise have for any of the credits. Filing definitely is beneficial. Now, let me drop this nugget on you. People who are married, you can file head of household. This is the stipulation. In order to file head of household as a married individual, you must not have lived together the last 6 months of the tax year. And you must be able to prove that you guys have 2 different addresses, that you live separately. So you can be married, but as long as you guys did not live in the same household the last 6 months. So let's say that you live together the first 4 months of the tax year, and then you went through a separation, and you didn't live together the last 6 months of the tax year. Guess what? You can use the head of household status if you qualify for a head of household status. Okay, if you qualify. Okay, so just because you're in a household, the IRS, that's not enough to qualify for the head of household status. Okay, so that's why your tax professional may be asking, hey, do you have any bills in your name? If you don't have any bills in your name, then it's kind of hard to prove that you are head of household if your tax return is ever audited. Okay. Let's see. I hope that answered. So I would advise that you file together. You'll see more of a benefit with filing together. Or you can just let me file your taxes and I'll show you. All right, let's see. One that said the pandemic didn't start until April. So I wasn't sure. I feel like I was affected before April because people were having symptoms and all of that before they technically called it a pandemic in April. But according to the IRS, for these particular credits, then we can only look at April 1st, 2020 through December 31st, 2020. Okay. Let's see. All right. Woo. All right, you guys. So, oh, you're welcome, Joy. All right. So thank you so much, Gary Cole. Y'all follow Gary Cole. He's an awesome tax professional. You guys need to follow Sylvia and Joy and Quintasha. Like, it's a lot of awesome Jaquella, of course. It's a lot of self-employed, the tax preparers on here who are amazing. Okay. All right. All right. So I think I've answered all of your questions. I hope that this was very beneficial to you guys. Thank you so much for tuning in. Nikki said, does bankruptcy affect tax returns? It depends on the type of bankruptcy that they have filed, because a certain one would take their refund. Okay. Would take their refund. So it depends. It definitely depends on the type of bankruptcy. Okay. All right. All right. Hey, Samantha. All right, you guys, I'm going to leave this up. And to all of my tax professionals who are on here, I am going to actually do something that is so amazing for you guys, because I am a continuing education provider. What I am going to do is I'm going to edit this video. I'm going to upload it to our school. And as long as you pay the fee, I think I'm going to only charge like $29.99. Pay the fee and answer 10 questions related to this. I'm going to make sure that you receive continuing education credits for this, if this is something that you would like. Okay, and then those continuing education credits, it would be effective for the new not the tax season that we're in, but the upcoming tax season. Okay, so I would do that for you guys, especially if you watch the entire time. Okay. Yes, it's going to be up for a little while, and then I am going to move it over to paid, part of our school. Okay. All right. Well, thank you so much for tuning in. If you're interested in starting your tax business, be sure to reach out to me. I want to help you with start growing and building your tax firm. And if you are self-employed, if you're an entrepreneur or a contractor, I would love to work with you for this upcoming tax season and beyond. We provide virtual service all over the world. So I look forward to helping you to qualify for this credit and to help you determine what amount you qualify for and what scenario is best for you. All right. Okay. Sandra English says she got a question. Okay. So Sandra said, do you know if the extra $600 of unemployment will be taxable income for earned income credit or other income credit? This is a very good question. The answer is no. Unemployment is not considered taxable. It's not considered earned income. Let me be clear. It's not considered earned income. So let's say if you received $1,000 in unemployment, right, and you have a dependent. Okay, so you're not going to qualify for the earned income tax credit, the child tax credit, the additional child tax credit, or the other dependent tax credit. Why? Because unemployment is not considered earned income. However, you have to pay taxes on the unemployment that you receive. So if you receive unemployment, then you would have needed to pay taxes throughout the year. If you did not get taxes taken out, then when you file your taxes, you will have to file taxes on or pay the taxes that was due on that amount. And listen, you guys, that alone is going to affect a lot of taxpayers' refunds. And so what you guys need to understand is that you cannot defer this to another tax year. You can't say, oh, I'm just going to file it on my income tax, because guess what? It's federal money. So the IRS already know that you got this money, and they are going to either recalculate the tax return that we prepared, and your refund will be lower, or they'll send you a tax bill at a later time with this amount. So I would suggest that you give your tax preparer all of your documents at one time, so you guys can sit there and go through different scenarios and figure out what is the best way to reduce your tax liability so that you can receive the max in refund. Okay. All right. So listen, I'm telling you guys this, that whether you go to me, you go to Samantha, you go to Nikki, you go to Joy, Sylvia, Quintasha, Jaquella, it don't matter who you go to. As long as you received unemployment, it is going to affect your refund. It's going to affect your refund, especially if you did not get taxes taken out. Okay. So there's no need to hopping from tax preparer to tax preparer. Okay. You need to go with a solid tax preparer. You need to go with a team that is solid, a tax company that is solid, that can stand behind the work, and that's available for you after the tax season. Okay. All right. All right. So I hope that answered. So you guys need to have earned income coupled with that unemployment. All right. So I can do a whole nother video on that, because there are different scenarios regarding that you guys may need to know. Okay. All right, you guys. Well, I am done. I hope that answered your question, Sandra. I just wanted to make sure. Okay. Okay. All right. Okay. All right. So no more questions. You guys have a great day. Thank you guys so much for tuning in. God bless.